Thanks for clicking! The Bank of Canada is prepared to cut rates by another 50 basis points if warranted. This according to the media's summation of the governor's appearance before the Senate Finance Committee last week. Or what actually happened.
So you're not going to tell us what you're going to do in December and whether there would be another
the direction, but we'll decide exactly what we're going to do in December.
I love you.
Indeed, and the ability of the Canadian Senate to ask the governor more nuanced questions than when's rate cuts was on full display during that appearance, with Canadian senators asking the governor about the falling value of the dollar, the central bank's outlook given the changes to immigration coming down from the government, opportunities amid rising U.S. isolationism, and the bank's thoughts given Canada's growing debt. Given that, in the aftermath of the governor's appearance before the Senate, the media continued to hype potential rate cuts coming in December, while mostly ignoring the other parts of the conference that revealed quite a bit about the bank's outlook for 2025, I think it's worth going over what the governor had to say when asked about real, non-rate cut questions.
That just wouldn't make any sense.
So what I want to do today is go over the governor's appearance before the Senate Finance Committee, take a look at the bank's changing outlook heading into 2025, and then discuss some implications. Stats Canada is set to release Canada's inflation data for the month of October in a couple of weeks, which will obviously have a big impact on the bank's decision in December. We will obviously have an update out on that data on this channel. Click like and subscribe if you want to get those updates, but for now, let's get into this appearance. On to the appearance. First up, the exchange rate, Canada's falling dollar. The governor was asked if he thought the falling value of the Canadian dollar would result in inflation.
Are you not concerned that that will lead to inflation with a weak Canadian dollar?
And he gave his usual non-answer that we hear at press conferences, that we have a flexible exchange rate, etc., etc.
We have a flexible exchange rate.
We have a flexible exchange rate. Look, the flexible exchange rate.
What did he say?
But, and here's the key, the Senate showed an ability to think on its feet, with Senator Marshall pushing the governor a bit further.
Time when I asked you last time you were here, I was seeing the odd article about, the value of the loonie depreciating, but now I'm seeing more articles. So at what point do you look at it and say it's a concern for the bank, or do you just let it slide? If it goes to 68 cents or 66 cents, that's it. You don't, there's no reaction to the Bank of Canada.
Wow, yeah, that's a bit more direct than we're used to hearing at the press conferences. And then when the governor got sidetracked even more on this non-answer, the senator pushed even further.
A quick comment, we're almost out of time here on this one, but just to Senator Marshall's point, is there a value of the loonie that troubles you?
Now, while the governor didn't really answer the question, he did offer one tidbit of useful information, that the central bank is more concerned with global shocks than it is with a falling currency.
The final thing I'll say on the exchange rate is the thing that does move the exchange rate much more than interest differentials is sort of risk sentiment. So, if risk sentiment were to turn against Canada, or if a global risk, there's a really big flight to quality in the world, and that'll cause a big flight to quality in the U.S. Those are the things that actually have bigger effects on exchange rates.
So, if the governor is to be believed by this statement, the central bank is less concerned about us having a lower interest rate than that of the Fed, less concerned about the interest rate differential, than it is about global shocks, exogenous shocks that could push up the price of the dollar, of which there are obviously many: Ukraine, Israel, Iran, Lebanon, take your pick.
Clear skies ahead.
And this was at least somewhat new, as at previous conferences the governor had at least acknowledged or stressed that the bank was cognizant that it could not diverge too much from the Federal Reserve without our dollar sinking, incurring inflation.
Yes, there are limits to how far Canadian and U.S. rates diverge. We're still not close to that limit.
Next, on to immigration. The Senate once again showed their ability to think on their feet and connect two ideas at once.
Whoa!
With the French senator bringing up a good question. The bank published its monetary policy report on October 23rd, but the government changed its immigration quotas on October 24th.
What is the impact of the immigration policy on the economy and on the policy framework? Your predictions would not have been the same if they had been published a week later.
And, said the governor, though the bank hasn't had time to put together any new numbers as of yet,
come on, I'm busy.
It is expecting that these lower immigration numbers will put downward pressure on Canada's economy.
Less new workers entering the economic, and therefore less potential. Indeed, it means that the timing is a little bit different between supply and demand. But the main impact will be on the growth productions. The impact on inflation will be less important.
So, if the government isn't going to be propping up the economy with increases to immigration, then the central bank may have to push interest rates relatively lower.
Why didn't you tell the rest of us?
Next, the governor was asked about how we measure inflation, something I think many Canadians would agree with, that while Stats Canada, while the bank says inflation is well within target, it sure does not feel like it.
I get confused when you talk about core inflation. And so isn't that confusing more Canadians that given the mortgage interest costs and gasoline costs and food prices and that's what causes Canadians the most grief, that it's excluded from calculations? And isn't it akin to me saying that I'm very wealthy if I exclude all my debt obligations?
And while the governor was a bit snippy,
I'm sorry we confused you.
The frustration level's the same, even if the questions are better. The governor noted that while the CPI isn't perfect, it is sort of the best that we have.
No consumer basket is perfect, and everybody in Canada has a slightly different consumption basket. But the CPI is designed to be the best representation of the consumer basket of Canadians, and we want the rate of change of the prices in that basket to stay close to 2%.
We're gonna do.
Next, and this was particularly interesting given the current geopolitical context and what's occurring down south, the governor was asked that, although we hear about a lot of downside risk coming from the geopolitical context, bad things that could happen coming from the international arena, is there anything good that's occurring right now that the governor can point to?
Positive geopolitical risk that you'd like to speak to?
Then, for his part, the governor noted that this very well could be an opportunity in disguise.
In recent years, the combination, I think, of China sort of moving up the value chain and competing more directly with other countries now. It's not the low-cost producer, combined with greater use of tariffs and trade restrictions with respect to China. China's trade with the United States has gone down. Canada is now back to second. Mexico's number one. So trade is shifting. And if you're a Canadian business, there are opportunities.
And I think that's a very interesting point that is often overlooked. While the United States may be moving towards more of an isolationist outward stance, there is some opportunity there for Canada. If you'll remember, back in 2016, former President Trump campaigned on ripping up NAFTA, but then we ended up with the USMCA, which was, to a certain extent, a distinction without a difference. So, even if the United States is turning more isolationist, that could be an opportunity in disguise, as Canada has some advantages not available to other countries. Location, business, security, path dependencies, etc.
The money's out there. You pick it up, it's yours.
And finally, the governor was asked about Canadian debt levels, particularly timely, given that our deficit came in higher than expected.
We have heard from the government that they have intended to extend their borrowing authority. We are watching new spending programs, and we're watching politicians negotiate even more spending over the next little while. You have said in the past, working at cross purposes with the central bank's efforts to bring down inflation, government spending often does that. I think the quote was, it would be helpful if monetary and fiscal policy was rowing in the same direction. Are you closer to that or not?
For his part, the governor said that fiscal spending isn't as much of a worry as it once was, as the inflation rate is now well within target.
Those comments were really when we were in a situation where economy was overheated. We'd raise rates very forcefully to get inflation down, and against that context, increases in government spending, particularly if they were faster than the potential growth of the economy, could row in could row in the opposite direction to getting inflation down. And my comments at that time were very much in that spirit. Now we're in a pretty different situation. And I think we're back to a more regular situation where the central bank governor doesn't comment on fiscal policy. I don't feel I need to comment on fiscal policy.
Which I thought was particularly interesting, that the governor actually admitted in public to using his press conferences to give the fiscal authorities a scolding, which we kind of thought he was doing back when he was discussing the fiscal spending and rowing in the same direction. But it's good to know that the governor sees these press conferences as an opportunity to effect fiscal change using his bully pulpit. The governor sees these as opportunities to send a message.
Did you hear what I said?
So, the governor actually touched on quite a few important issues at this appearance. The central bank's divergence from the Federal Reserve, the bank's outlook given changing immigration targets, CPI measurements, U.S. isolationism, as well as Canada's growing debt. In the media reported rate cuts.
Are you so proud of me?
But these are all very important topics. The value of the Canadian currency, U.S. isolationism, immigration coming to Canada, or lack thereof, as the case may be, are all important topics which could, and probably will, affect Canada's economy far more than a single rate cut coming up in December. So, while Canada's media continues to fulfill its apparent role of being a puppet for the real estate industry, and this is something I thought I would never ever say, the Senate does appear to be on the case. With that said, we will obviously continue to track Bank of Canada policy and how it reacts to all of the aforementioned issues today on this channel. Click like and subscribe if you want to get those updates, but for now, thanks so much for watching.